Stock number 5. A company that lost $700 billion in market value in a single year. The largest destruction of corporate wealth in Wall Street history. Then rebuilt every single dollar, and then doubled it. To understand Meta's AI story, you must first understand its near-death experience. In 2022, Mark Zuckerberg made one of the most controversial bets in technology history, spending over $36 billion building a virtual reality world called the Metaverse. The market's verdict was swift and brutal. Between September 2021 and November 2022, Meta's stock collapsed from $384 to just $89, $700 billion gone. Analysts wrote the eulogy, employees left in waves. But inside the collapsing stock price, something extraordinary was quietly happening. Zuckerberg, under enormous pressure from investors, the press, and his own employees, made a decision that would define the next decade of his company. He called it the year of efficiency. Meta laid off 21,000 employees, the largest tech layoff in history at that time. It slashed its metaverse budget. It reorganized every engineering team around a single priority: artificial intelligence. And then it did something no one expected. It open-sourced its AI model. Meta released Llama, its large language AI model, completely free and open source. The technology world was stunned. Why would a company give away something worth billions? Because Meta doesn't sell AI. It sells attention. And smarter AI means more attention captured. Here is the number that explains everything about Meta's AI investment thesis. $3.2 billion. That is how many people use at least one Meta platform, Facebook, Instagram, WhatsApp, or Threads, every single day. No AI company on Earth has a larger human data advantage. Meta's AI already decides what 3 billion people see, read, and buy every single day. Its recommendation algorithm is the most sophisticated content targeting system ever built. Adding generative AI to that engine is not an upgrade. It is a transformation. Meta's stock completed one of the greatest recoveries in stock market history. From its low of $89 in November 2022, it climbed to over $500 by early 2024, a 460% return in just 14 months. The investors who held through the panic were rewarded beyond imagination. Looking toward 2030, Meta's AI advantage is compounding across advertising, commerce, augmented reality, and its own AI assistant reaching 1 billion users. The company that almost died in 2022 may be the most underestimated AI stock of the entire decade. The first 5 stocks on this list are names every investor already knows. But the final 2? These are the ones that separate serious AI investors from the crowd. Stock number 6 is a company hiding in plain sight inside every major AI system on Earth. Stock number 6, a semiconductor company that doesn't compete with NVIDIA. It supplies the tools that make NVIDIA's chips possible. Without this company, the entire AI hardware revolution stops completely, overnight. ASML is a Dutch company most American investors have never heard of. It holds a complete global monopoly on the machines that manufacture the world's most advanced semiconductor chips. Not a dominant market share. A monopoly. 100%. There is no alternative. ASML's extreme ultraviolet lithography machines, EUV, are the most complex objects ever manufactured by human beings. Each machine contains over 100,000 individual components. Each machine costs $380 million, and ASML can only build about 50 of them per year. The geopolitical dimension of ASML makes it unlike any other stock on this list. The United States, Netherlands, and Japan have collectively banned ASML from selling its most advanced machines to China. This restriction has made ASML's existing customers and their chips, even more strategically valuable. ASML's order backlog, the future revenue already committed by customers, currently stands at over $40 billion. Every AI chip advancement planned through 2030 requires more ASML machines. The company's revenue trajectory is not a projection, it is a contractual certainty. Now, stock number 7. The final name on this list is not a hardware company. It is not a search engine or a social network. It is a pure artificial intelligence company, one that most retail investors have never been able to buy, until very recently. Stock number 7, Palantir Technologies, ticker PLTR, founded in 2003 by Peter Thiel and Alex Karp. Originally as a classified intelligence tool for the CIA and NSA, it is now the most sophisticated AI data analytics platform available to both governments and corporations on Earth. Palantir's AI platform, AIP, does something no other AI product currently does at scale. It takes a company's own private data, the data that lives inside their internal systems, and allows AI to reason across all of it simultaneously. The results have been described by clients as borderline miraculous. Palantir already works with the U.S. Army, the U.S. Air Force, the NHS in Britain, BP, Airbus, and over 300 of the world's largest organizations. Its government contracts are essentially permanent. Its commercial AI growth is accelerating at over 50% annually, and it is only just beginning. Every serious investor knows this truth. The higher the potential reward, the more devastating the potential loss. Before you invest a single dollar in any AI stock, you must understand exactly what could go wrong. And some of it is genuinely terrifying. Risk number 1, valuation. As of 2024, NVIDIA traded at over 30 times its annual revenue, Microsoft at 12 times. These are not cheap stocks. They price in a future that must arrive perfectly on schedule. If it doesn't, the correction will be swift and merciless. History teaches a brutal lesson about technology valuations. In 2000, Cisco Systems, the infrastructure provider of the internet boom, traded at 240 times earnings. It was called the most important company in the world. Today, 24 years later, it still hasn't returned to that price. Risk number 2, the AI revenue gap. Right now, hundreds of billions of dollars are being spent building AI infrastructure. But the actual revenue being generated by AI products, the return on that investment, remains a fraction of what was promised. Wall Street is beginning to ask uncomfortable questions. In July 2024, Goldman Sachs published a report asking whether the $1 trillion being spent on AI infrastructure would ever generate sufficient returns. They cited concerns from major technology companies themselves that AI monetization is moving slower than the capital being deployed. Risk number 3, competition and commoditization. In technology, monopolies rarely last forever. The same open source movement that Meta used as a weapon could eventually commoditize AI models entirely, making the intelligence itself nearly free and destroying the pricing power of every company on this list. Risk number 4, regulation. Governments across the United States, European Union, and China are actively building frameworks to regulate artificial intelligence. The EU AI Act is already law. America's executive orders are expanding. One wrong regulatory decision could reshape this entire investment landscape overnight. Risk number 5, geopolitical disruption. 70% of the world's advanced semiconductor chips are manufactured in Taiwan by TSMC. Taiwan sits 90 miles from mainland China. If that supply chain is ever disrupted, for any reason, every AI company on this list faces an immediate crisis. Risk number 6, the black swan. In investing, A black swan is an event so unexpected and so catastrophic that no model predicted it. COVID was a black swan. The 2008 financial crisis was a black swan. AI creates the conditions for an entirely new category of black swan that has never existed before. But here is what every great investor understands about risk. It is not something to be avoided. It is something to be understood, priced, and managed. The investors who studied these risks in 2009, in 2012, in 2020, and bought anyway, are the ones who changed their financial lives forever. We have examined the companies. We have examined the risks. Now we must look forward. Because the most important question for every investor watching this is not what AI is today. It is what the world looks like in 2030. And the answer will reshape everything you think you know about wealth. The year is 2030. 6 years from now, a child born today will be starting first grade. A college student today will be 30 years old, with a career already shaped by artificial intelligence. The world they inhabit will be as different from today as 2024 is from 1998. By 2030, McKinsey Global Institute projects that artificial intelligence will have automated between 400 million and 800 million jobs worldwide, not eliminated, transformed. The nature of human work is being rewritten at a speed no previous technology has achieved. In 2030's healthcare system, AI will diagnose diseases from medical imaging with greater accuracy than any human radiologist. Drug discovery timelines that once took 15 years will compress to 18 months. The first AI-designed drug has already entered human clinical trials. We are not waiting for this future, it is already arriving.